Do they get herded with the shepherd dogs?
They have dogs.
That's a good mic test.
My mic doesn't work? I don't need a fucking mic.
Wait. Profits worked.
No, it didn't.
Yes, it did. It didn't?
No.
Check mic. See, you just, did you turn it on?
Nah, I just picked it up.
Hell yeah.
I thought we were just gonna yell. But maybe it'll be good for my voice if I don't do that.
Yeah. I'm trying to yell. There's a Travis Scott concert later this week. I don't know if you guys are aware. I was talking to one of the Sonic guys. He's like, Travis Scott is coming through Dubai and we're throwing a party. And I feel like if I was gonna yell anywhere this week, it would be a Travis Scott concert. Thank you.
Yeah, you're going to that alone.
You don't like Travis Scott?
Not that I don't like it, but I'm just not going to that event.
I haven't listened to a single Travis Scott song. I'll tell you the truth. My understanding is that he's a rapper and that teenagers, like the Zoomers love him, or maybe the Gen Alpha. But the thing about the Zoomers, so I grew up like deep in punk rock, right? Like before it was cool, and before, you know, I was not cool in middle school or high school or elementary school. But in elementary school, I wrote a lot of rap, and unrelated to the punk rock, and I backed out of a rap battle in 5th grade. And I'll never forget it. This traumatized me, and it changed who I am. The whole 5th grade was waiting for me to show up at this rap battle against, God, it was like Sean DeNegris or something. He grew up into a great guy. And I backed out. Like I was on the fucking playground instead of the basketball court. I'll never forget it, dude. I still feel like inadequate as a human. But then I transitioned into punk rock, and there was moshing, right? You get in the pit and shove people around and shit like that. You know, now I'm 31, so when I get into the pit, it's a bunch of like 17-year-olds. I'm like, Dad, you know? Last concert I went to, they were like crying by the end of it. And I was like hugging them. I was like, you guys are doing great. Keep throwing your fists. Like, oh, we're angry at the establishment. I'll see you on TikTok, you know? So I'm a little, like, I don't want to be too intense at Travis Scott. I just don't know the rules. I don't know if you have thoughts on that.
Welcome to therapy with that.
All right, let's kick it off. Let's get everybody to close the gaps in the chairs. We've been talking about, you know, the attention economy, how to capture people's attention. A great way to do it is to reorient users. No, you right there who just sat down.
Come to the front row.
Right in the front, dude. Right in the front. Don't try to not make eye contact with me. These guys are like, oh, I'm so busy, dude. I've got. Okay, not these. The send guys. Everyone around Yash. Yeah. Come forward. Let's close the gaps. Everyone who's standing, you don't enjoy standing. Don't pretend you enjoy standing. Let's go. All right, it's a little better. Cool. So last talk of the day for the ICO Summit. Really appreciate you guys coming out. Appreciate everybody, you know, kind of jumping into this conversation around tokens. I think tokens, what makes a token, what makes a good token, these things are changing in real time in front of us in the industry. It's one of the most exciting pieces of crypto, in my opinion, right now. Futarchy definitely at the middle of it. My name's Edgar. For those that don't know, I run a couple crypto companies in the space. Most relevant today is Mountain DAO, the developer community that hosts a summit twice a year out of Salt Lake City. I've got Barry here with me. He's a longtime friend, co-founder of Mountain DAO, and we've been the shepherds of Mountain Capital, which was the first Futarchy DAO to launch on the MetaDAO platform. Just had our first proposal conclude, and it failed, which I think is really sick because it highlighted a ton of key engagement metrics in the DAO that I think are really important for the long term. So I figured we'd jump on, kind of talk about that, talk about kind of how we think Mountain Capital is evolving, what kind of changes it demonstrates in the this token evolution kind of vector of crypto, and kind of go from there. What do you guys think? Is that cool? Is that interesting? Is that boring? Should we talk about something else? You guys want to? Should we make Barrett rap Travis Scott? Barrett's like, Edgar, shut the fuck up so we can actually add some value to this conversation.
Bro, I can't even rap Travis Scott because it would just be a bunch of bleep bleep bleep, you know.
All right, so Barrett, let's kick it off. Tell us about Mountain Capital. Tell us about how we got to this Mountain Capital idea, why we decided to do it through MetaDAO. Give us kind of like the origin story.
Yeah, so for those that don't know, Mountain Capital is a Futarchy governed investment DAO, right? The way that we got to that is Edgar and I had built Mountain DAO 4 years strong. We had a number of companies come out of it that have won hackathons, gone on to raise VC capital. A year ago, we wrote our first check out of Mountain DAO itself, and it was into MetaDAO. And then we wrote another one into Asgard Finance, and that kind of, there's a lot of new companies that come through. You get potentially awesome deal flow, and we're like, hey, how do we, capitalize on the momentum and talent that Mountain DAO has created, right? And that was the easiest way to do that, we found or thought, was a fund, right? Now, there are two options. Well, there was really one option at the time, and it was Edgar and I go out and we raise our own venture fund, right? We talk to LPs, and we put together our own thing, and we just fire capital off as we see fit, right? That's kind of fucking boring. Also, we both have other jobs, so it's not like we can dedicate 100% of our time to being VCs, right? Which I think is effectively what you would need to do if you wanted to have a high performing fund and not burn your LPs. So we're okay, well, we want to do an investment fund. How do we do it? Let's make it a DAO, right? What does that mean? How does that look like? And obviously we're oh, dude, well, we have already an investment in MetaDAO. It makes a lot of sense for us to use Futarchy, right? How does it going to work? It makes a lot of sense, right? You make an investment into a company. Is it going to increase or decrease the token price of the investment DAO, right? So it's very straightforward on that. And that's kind of how we came to Futarchy, along with the fact that we are both big believers that if you really want to have something decentralized from a governance standpoint, if you are not doing Futarchy, it is not really decentralized from a governance standpoint, right? Because you can look at VC projects, right? The team has 20%, which is totally fine. I have nothing wrong. There's nothing wrong with that, right? And then you have, VCs, angels, other insiders, whether they're advisors or whatnot, right? They have another 25, 30% potentially. And now you have effectively concentrated all of the decision-making power into this very small group of people, right? And if you're voting, it's not really there's not a two-sided marketplace, right? So it's whoever's got the amount of tokens is going to make something happen, right? Especially in the early days when float is relatively low to the community. And so enter Futarchy, right? It's a two-sided marketplace. So even if Edgar and I did have a bunch of tokens, 20%, which we don't because we bought ours, at least somebody on the other side with USDC could come in and be hey, I think that these two are fucking idiots, and I think that whatever proposal that they made is wrong, and so Edgar and I can, sell our tokens into the market and somebody could buy them up, and that's a beautiful thing, right? It really does decentralize and takes power away from the people that did launch something. Now, that is definitely scary when it is your baby, but at the end of the day, I think that for an investment fund, I think that this is a great feature for us, right? And that's kind of what Mountain DAO is, and why we chose Futarchy. And also I think that it's just a really cool experiment, and why would you not want to be on top of at the leading edge of one of the coolest crypto experiments in the entire space as well.
Yeah, totally. And I think we've been blessed with, before this first proposal, right, which just happened over the last few days, a lot of our views on why Futarchy is interesting were largely hypothetical, right? I mean, you have MetaDAO, which is itself a Futarchy. You've got a couple other Futarchy DAOs. But, we would say things like, Futarchy DAOs should be more decentralized because capital can come in from the outside. And at least, I hadn't seen phenomenal examples of that in production. One of the things I was excited about to see, and I don't know if you had a chance to review this, I saw MetaDAO put out stats on the first Mountain proposal and what trading and engagement was like throughout the proposal lifetime. A lot of the trading came from non-Mountain holders, right? Pushing against this proposal. And so I thought that was pretty interesting, right? Because it highlights the infinite pool of liquidity that can play in this decision making. Now, obviously there's trade-offs there, right? We can kind of jump into that and talk about that, but I thought it was a really, really cool example to highlight kind of these really unique aspects of Futarchy. Barrett, I'm curious for your thoughts, right? We're here at ICO 2.0, right? MetaDAO obviously built a launchpad that Mountain Capital launched on. But MetaDAO's launchpad is one of many now that are popping up across Solana, right? And this is like, the flavor of this month has been everybody's launching a launchpad, right? What are your thoughts on like the launchpads in the ecosystem, right? Good ones, bad ones, different focuses, and then how MetaDAO's launchpad kind of ties into that and to where there might be strengths, where there might be weaknesses for like a few Futarchy governed products relative to what else exists in the space.
Yeah, so I think that pretty much there are like, well, once you go permissionless, they're all shitcoin launchpads, right, at the end of the day. And every launchpad that exists outside of MetaDAO's launchpad is just a shitcoin factory. You have Pump Fund, which is literally its only goal is to pump out as many tokens as possible. You have Radium's launchpad, which is effectively the same thing. You have Meteora, which I just associate to as a shitcoin launchpad as well. Bonk Live, I think, is like interesting because they are not like permissionless in the sense, at least from my understanding. So they're like still catered more towards companies like launching on their launchpad. So I think that one's like, a different category than kind of the rest. And you also have, I guess they also just launched like their own shitcoin factory, letsbonk.fun. So, they have both of them. And then you have like MetaDAO, which I think, at least until it goes like fully permissionless, is not just a shitcoin factory. It is, at least as of right now, I mean, we're the only people that have launched on it, but it is suited to cater towards people that want to build like actual products. I don't really like see the reason why you would just launch shitters on like Mountain or MetaDAO, just because of the way that's designed. Like Futarchy and shitters like don't really go hand in hand because there's a treasury and like most of these tokens that are meme coins, like they don't really need treasuries, right? Like they're just there to like see if they can get a rabid enough community, and the community can like pump the price, and you have some people on Twitter like Dip Wheeler for Fartcoin, right? And like those guys are like who's gonna like make the token go up or down, right? And I think that's like, so you have like the two categories. You have stuff that's like Pump Fund, Radium, Let's Bonk, and then you have kind of your other ones that are more catered towards like projects that are like, hey, like I want to build something that requires capital for like a team, infrastructure, etc., to build some product that product will potentially drive value to the token. And that's where I see MetaDAO and Bonk Live and Maybe there's another one that I don't know about or I'm missing right now at least. So that's how I look at like the Launchpad space. And I think most of them are effectively the same. Futarchy, obviously MetaDAOs is like very different because it's the only one that does enable you to implement like Futarchy out of the gate. And so I think that that's like a strategic advantage if that's something that you're interested in, right?
What do you think about like Dev Fun, for example? These platforms that are like, or
What is that?
Dev Fun is like it's like a launch pad that focuses on developers launching apps alongside coins, but kind of in like so I think there's at least a creator experience difference between a platform like DevFund where you are launching an app from within the platform, similar to Pump Fund, right? Where like you're going on Pump Fund, you're clicking create coin, that's all happening kind of within that experience versus, I'm sure you guys have seen like Believe has been blowing up with their launch a coin thing recently. That's like a Twitter experience, right? So if you're launching a coin alongside an app with Believe, you're tweeting about, I don't know, your GitHub repo or your app. It doesn't live within like the Dev Fund stack or the Believe stack in that case, and it's just launching coin alongside. But Dev Fund is kind of trying to blend this, launch an app and a coin at the same time kind of experience.
Yeah, I like that. I mean, it's like its own niche, right? It's not just like, hey, here's a new token, like, please buy my token. So, I think, I have just no experience with Dev Fund or hadn't heard about it till just now. So, but I definitely like, I don't really care about just endless amounts of tokens that aren't like really related to anything. I mean, like I get it, like meme coins, we all have fun and like gambling or whatnot, but I think generally speaking, if you want to attract, if you want to gain people that allocate capital on like a much larger scale to crypto, right? To bring some sort of like more legitimacy to the space, you don't really care about like your flavor of the month token, right? Or your flavor of the week token, really for the trenches, I guess. And so it's cool to see like Dev Fund like iterating on this Launchpad thesis to like bring something to the table. I think Launch a Coin today, like that's kind of interesting, right? It sounds like more like you're going to get a bunch of meme coins, right, off of like tweets, which whatever. It's a new mechanism to do so. It kind of like undercuts like Pump Fund, which I think is kind of interesting because why go to a website? Everybody's already on Twitter habitually anyway, so somebody build Blinks to trade Launch a Coin tokens on Twitter, so then I never have to leave. That's great. But yeah,
it's a really good idea. Cool. Yeah. Let's maybe talk about our experience with Mountain Capital and getting proposals to be live. Getting proposals through to voting, right? Because I think we've had a pretty interesting experience in the pre-proposal stage, right? If you guys have been in the Mountain Capital Discord. We've been running this proposal staging architecture where conversation will, go on in kind of an unstructured way about anything, right? And then that conversation, its goal is to pick up sponsors to fund a proposal going up to MetaDAO, right, or to the Futarchy platform. This has also been interesting because it's introduced, there have been some unexpected challenges introduced. There's a liquidity requirement to put up a Futarchy proposal for trading. And that requirement is percentage based, right? On the, effectively the price of the token, right? We were targeting loosely to raise about $1 million through the Mountain Capital token sale. We raised 5.8 million, right? So about 6 times our goal, and that rocketed the liquidity requirement, right? Maybe talk about that, like, what has the experience been like for you, with proposal staging, with getting to proposals, with the liquidity requirement, if someone's thinking about like launching something on MetaDAO, right, on their Launchpad, like what are the things they should be thinking of that maybe we didn't, or we've now learned about?
Yeah. So I guess like let's start with what's it like to get like a proposal to like production. One of the things that I think is like always like challenging is like, hey, when do you stop discussion and then like actually put something into a decision market, right? Because there can be endless amounts of discourse on something, and at some point you have to be like, fuck it, like I'm gonna just put this up, right? Like for this first proposal, we kind of did that, right? We were just like, okay, like let's see if this will pass. There's been a lot of discourse, people go back and forth. We take some stuff and then we made a proposal and we put it on a market and it traded. It failed, great. But I think that that's like probably one of the most interesting things is like, or tricky things to navigate is in the discourse to where you are actually gonna put something up for like trading. When it comes to like the liquidity requirements for Mountain Capital, I think that, yeah, I mean like initially we never really thought it was gonna be like overtly expensive. I think currently it's like somewhere around like 100 to 120K to like make a proposal, which is like fine. I actually don't have like a terrible issue with that because there aren't safeguards on the MetaDAO contract for proposal creation. So if so if anybody can like make a proposal and it costs $1,000, like you're gonna inundate the amount of like proposals that are like up, and like the market's got to be like, oh shit, I have to trade all of these, and some decision is probably going to be made that's less ideal. And so like I don't really have an issue or see the problem the way other people might see the problem of like it's prohibitively expensive. Now it becomes a problem if there are no solutions to like get something there, right? Like if you are like, hey, like I want this proposal to go up, and you can convince like enough capital to like be like, yeah, like I like this proposal and let's pool our money together, and then we can like us together can launch this proposal, right? I think that that's like the happy medium where you don't want to lower the bar till it's like, oh, like $2,000 here, $2,000 there, and like you have 10 proposals up at once. You're like, good God, what's going on? Especially if there's like, hey, here's a $2,000 proposal that is to invest 500 grand, right? And then you have 10 of those up at once. Mm-hmm. That's like incredibly not ideal. And so I think that there is like some, oh God, I hate to use this word almost, economic security for an investment DAO to have a high bar for proposal creation, right?
If we were to solve the, let's put aside the example where there's like 10 proposals to invest, I don't know, 500K or something like that, right? If we put that concern aside and we imagine that we've solved that with some kind of technological solution, is there a world where you want to launch proposals like the meme coin platforms are launching tokens, right? Like you look at like LauncherCoin stats and there's thousands and thousands of tokens coming out. Most of them go to zero. Most of them are irrelevant. A few of them rise to the top, right? But it's this activity of everybody feeling like they're involved, feeling like they can all launch a token, right? This like empowering people to be creators that I think is part of what's like pulling people into the experience. Is there room to run a DAO like that?
No.
Why not?
Because there are finite resources, right? So let's say that you have 1,000 proposals up at the same time, right? Let's say you can trade them all, right? How are you going to implement all of them after that? And then when you are inherently going to drop the ball on implementing some of those because there's just, the team isn't big enough at this DAO that's going to be doing those things, like what's going to happen to price after that, right? Because like people are like, oh, this is the price going to be if it trades up, right? Or if it fails, like this is what it's going to be. But the cost to the DAO of like, okay, like, hey, like now there's a proposal live and it's succeeded and then we just don't implement it, what does that do to the price, right? And I think that sets like bad precedent. And so I don't think it also depends on like the DAO itself, right? For us, like we, as an investment DAO, Mountain Capital couldn't like really have this unless they were like super small like checks because we would just run out of money, right? And you would just be like, oh, in a week we deployed $5.8 million and we have no idea what the fuck just happened. And so I think that for an investment DAO, it's bad. For a protocol, right, like let's use, I don't know, Drift for example. Like if Drift were to do this and they had 1,000 markets up, and they all like ended at the same time, and now they have 1,000 things that they have to do. And I think that that's like probably not good either, because one, they don't have the manpower to probably implement all of them, and realistically, some of those are also bad, right? Like they're probably like somebody just didn't pay attention because someone can't, like someone that's like, hey, like I want to be an active trader in these Futarchy government or like governance markets, isn't going to have the time to like read, do the research about like each one of these proposals and then trade the market effectively, right? And maybe that's fine because maybe somebody else did, right? So like let's say that they all like came to the end and they were all like great, but like then Drift still doesn't have like the manpower resources to do all of those, and then like you have another 1,000 the next day and another 1,000 the next day, right? And that's like where it doesn't really make sense for a company, because I think Mert had like a really good example, right? Like if you're a startup, you want to move really fast, right? And that means in like a very specific direction. And with this like, oh, now I have 1,000 markets to trade and now I have 1,000 things to implement, my vector has like no real direction, right? Or it could have no real direction. Maybe there's 1,000 things in the same direction and then it's fine, potentially. But I think that that's like a potential problem if you are a DAO that you should definitely think about. Yeah.
Yeah, I think it opens up some really interesting like decentralization challenges, right? Because fundamentally what you're talking about is a limited set of resources applied to a given project, right? Kind of describes centralization, right? Or a limit to the marginal value added by increasing actors within a DAO. And I think we've seen this, right? Like the DAOs, early Ethereum, that have tried to really be decentralized operationally from the start have largely just not moved anywhere. They've been startups without any velocity that kind of fizzled out and became these slow-moving behemoths. Cool. We're about 20 minutes into this. I want to get kind of questions from the crowd, but not just on what we talked about here. I think today's been really fascinating. If you've been here for a number of the talks, I think what all of us are trying to grok is what's happening with this fundamental token asset that has been like so core to the industry that we've been in. And I'm curious like what's on people's thoughts, right? We talk kind of primarily about Futarchy. There's been conversation around like general startup building. There's been conversation around attention and app coins. When you're walking away from this event, what are you guys thinking about? Who's got something like burning top of mind? So I think this is a great question. The question is around like, okay, if you've been following Mountain Capital conversations, there's this price versus NAV conversation that's been hot, right? Right now, it's a very easy conversation to have because NAV with no funds deployed is really obvious, right? We raised a little under 5.8 million, that's NAV, period. It's sitting in USDC, it's not moving, right? This is a two-part question. One is like, where is the appropriate price to NAV equilibrium, right? And then two is, how do we track NAV and how does price react as Mountain Capital goes forward? I think the first one doesn't have an objective answer, and we are literally writing history as we're exploring it as a DAO, and I find that super exciting. There are so many arguments. I was in Assemble at Crossroads and having similar conversations, and I made 3 separate arguments for why it makes sense for Mountain Capital price to be below NAV right now, right? You've got an experimental product, you've got infrastructure risk, we have no idea where any of this is gonna go, right? Therefore, there's gotta be a risky discount, right? There's a great argument for why it should be at NAV, right? It's backed by USDC. That USDC is sitting there in treasury. It makes sense that price trades around NAV. And there's a phenomenal argument for why it should be above NAV, right? There's talent behind this, there's community behind this, there's inherent value that goes far above the cash that's sitting in the account. And you can only redeem for that cash if the DAO decides to liquidate, right? Which creates a timing problem. And if you're bullish on the operations of the DAO, you're saying, okay, like things are going to go up by the time that liquidation happens. This should be at a premium, right? Especially if there are less sellers on the market. I want to make sure I have my piece, right? And the beautiful thing about finance is there's a great quote, right? That like finance is astrology for men, right? And I started my career at Goldman Sachs, spent a bunch of time on Wall Street, right? I couldn't agree more. If you look at a lot of the decisions that drive like fundamental modeling in finance, right? Look at like PE ratios. PE ratios are driven by human consensus, right? PE ratios in tech are higher than they are in, I don't know, certain more commoditized businesses because we've decided that that makes sense as a society, as an industry, right? I think we need price to NAV equilibriums, and I think those are going to resolve themselves in the markets over time. I have no idea what the appropriate price to NAV is for Mountain Capital. I don't know where it's going to end up, right? So I think that's interesting on its own, right? Now, price to NAV as we make private investments and it takes longer to, mark things up, hopefully up. I think it's going to run operationally similar to any PE fund, right? There's going to be markups quarterly or at a cadence that the DAO decides. I think what will be really interesting is when you're dealing with like pre-token or equity-based investments that just have no prices in the market, and we get this blend of TradFi native and crypto native people in the Discord arguing around what is appropriate to do around markups. Is our quarterly markups appropriate, right? Do we need weekly markups? Do we need monthly markups? Are those operationally relevant, right? And then I think price is going to trade, relative to the perception around the way that the DAO operates. I don't know if you have thoughts there.
No, not a whole lot. So yeah, I mean, like we don't really know. I mean, like you can effectively mark up every time a company does a round that you invested in and be like, all right, well, this is like the new valuation. Until then, let the market price it, figure it out. There's nothing that like we're gonna do. I'm not gonna sit there and fucking like go and be like, yeah, like I evaluate this like personally to like be up or down. I think the market should figure it out for yourself, and that's like the beauty of a token.
But one of the things I love about working with Barrett, there's a lot of people in this industry who say that they're about certain principles and they're not, right? How many founders have like shipped something, to say it's decentralized or to say it's following some long-term path, and ultimately they're just trying to OTC 50 mil for a mansion, right? Don't get me wrong, like I love mansions. They seem sick from the outside, When I get to go in one, I use the bathroom very respectfully. I'm like, I don't want to disrespect this mansion. But I think, Barrett and I are a lot more interested in trying to experiment with, potentially relevant chapters of history, of innovation, than we are in anything else, right? And so, he's a great partner to work with because we can be very aggressive in standing by these ideals that we believe in, right? If Mountain Capital as a DAO does not drive conversation and engagement and activity as a DAO, right? If DAO members don't act as owners, we're going to zero. Like my capital, his capital, all of our capital. Barrett and I are like not saving this ship, right? Because that's how a decentralized operation is designed to operate, right? That's got to be part of the experiment. And it's cool because we have a bunch of people in the Discord who are used to the old mode of operation. And they're like, hey, you guys, core team, like whatever, right? You got to be like doing the work here, right? And the answer is that if the core team is doing the work and that's the precedent, then like you shouldn't pitch decentralization in the first place, right? There's lots of great ways to build projects without decentralizing, especially with recent regulatory changes and the flexibility that's being offered there. So I think it's a really interesting opportunity to to experiment with some of these principles.
Yeah, I mean, it goes back to like, if we wanted to do all the work, I wouldn't let anybody else have any fucking upside, right? Like we could have just raised our fund and just deployed capital ourselves. But
man, I remember in the room when who remembers Protagonist, the fund, the Macaliano fund? Yeah, do your research. That's lore. You know, I mean, I remember they raised 100 mil, and I looked at Bear and I said, we should raise 100 mil. Sounds good, right? I'll be invited to a lot of parties. We raise 100 mil, I'm going to every party, right? And there's a lot of upside to that, right? It's just the trade-offs are different. You don't get to experiment with new models and potentially like push a community conversation forward, and I think we're pretty excited about that.
Yeah, I like Echo for what it's worth, right? I am one of the co-founders of Ranger Finance. We raised a little chunk of money from Echo. I like Echo's model a lot. I think that Mountain Capital is not dissimilar in the sense that there's somebody who's going to kind of spearhead a proposal, a deal, right? Like there is somebody that's like going out and like talking to a company, right? And they're like, hey, like I heard you guys are doing around, like I'm really interested. Maybe you're not going to let me on the cap table, but I can lead the charge at Mountain DAO or Mountain Capital, right? To write this proposal for us, and then bring it to the DAO, and hopefully we can get it to pass, right? And I don't think that that's dissimilar from Echo at all, right? And especially if you are going to be like, hey, like I don't have all that capital for myself to put it up, and so you and 5 buddies are like, hey, like. We're going to split carry, like let's say we want to do like 10% carry, and then me and 5 people are going to split it, and we're going to bring this proposal to the DAO together because we together have enough Mountain and USDC to make it work, right? So I think that that's like very similar, a little bit like more on the like even more potentially decentralized. I mean, like definitely more decentralized than like Echo, where they're normally like some like fund or a more prominent angel that's like going to lead that like charge or be like, hey, like I'll help like source capital, and that's also what's different, right? Like Echo is like, hey, I like am an investment group, right? And then like I'm gonna help source capital for your deal from like my network, right? But instead of like having to do that, you just go to the DAO, right? And then you convince the people at the DAO to be like, yes, we're willing to like pool our associated capital to it, right? And so I think that that's like what's a little bit different, and then obviously this is a DAO at the end of the day, so there can be just like a wide variety of stuff that you may or may not see on Echo, right? But I think that these new capital allocation and formation mechanisms are going to be like pretty exciting to like pay attention to, and obviously I think Mountain Capital is probably the most exciting capital formation experiment since the original DAO, right, from Ethereum. And so, yeah, but I like Echo a lot, correct, yeah. But like at the end of the day, right, like if you're homies with the homie that runs the group, right, you can be like, hey, like I got this group, like will you put it up for me, right? And that's like not, that's like, when somebody's like, I got this deal, I don't have all the capital, right, like, hey, what do you guys think about this deal? And like get a bunch of people and then like you put it up together, right? And so yeah, it's definitely maybe more multiplayer than like Echo is, which I think is really cool, right? And also it allows like anybody to get carry, right? So like you maybe can't even get on the cap table. Maybe you could get on the cap table, right? But like now you can kind of take like a much larger slice, get upside from the investment, and then also get carry, right? And that's what I think is really cool is it now like enables like anybody to be like a partner almost like at a VC fund, right? Or at any like hedge fund, right? Where they're getting bigger bonuses or like the carry, right? There's almost in the future, right? Like I would love to see Mountain Capital really be like, why would you ever go be an analyst at some fund where you don't get carry? Why don't you just source deals, bring them to the DAO, because you can put yourself in 5-10% carry, right? Depends on the deal and whatever. And I think that that's something that's like really exciting because, yeah, why would you ever go work? I mean, like maybe that you get a salary and you don't really get a salary at Mountain Capital, but who's to say that like in the future you don't like have some proposal that's like I'm paying like an analyst to be there full time, and then they can also get like carry on a per proposal basis.
Yeah, I mean carry, which is like the most lucrative wealth creation mechanism in investing, and therefore the most exclusive historically, right? And B, like this, I love this analyst analogy or this the kind of this analyst vision, because if you're thinking about if you think about finance, if you think about TradFi, it's all about who you know and what kind of deals you bring, right? And so when you're young, like if you guys are friends that are in like TradFi now, you're really doing this thing where you're working for a fund that is A, grinding you, B, like your value of growing your career is expanding your network, but your partners are incentivized to keep you a grunt. So they're like blocking you from building your network effectively as much as they can, right? And you're doing this thing where it just takes a really long time to build yourself up as somebody who's well known, right? And that's why you've seen like TradFi folks go to Twitter, right, and start talking about market insights and whatever, because they're building reputation and that's driving their career. Mountain Capital is like an extremely tangible way to do that.
Yeah, that's a great question. I think I haven't, I've done like a little bit to think about this, but until we kind of have like a big re-rating of the Mountain Treasury or like token price, I don't know if it's like super necessary to be like, okay, we gotta like really figure this one out. I think you should definitely try and like to start to design solutions for this like sooner rather than later, right? But I mean, it's, I don't even think it's been a month, right? Since like we launched. And so like, I care way more about like trying to get good deals to come up as proposals than I do like, oh, we gotta fix like bureaucracy, right? Because I think that like you run a way higher risk of engagement and attention dying out because maybe 6 months has gone by and like no great investment has like come to the table. I think that that's way more of a concern for me as opposed to like, holy shit, like it costs a lot of money to like do it. And maybe there's like the like, oh, I'm not gonna bring the proposal to the table because I don't have that capital in the first place. But again, right, like, there are people that have the capital and are willing to sponsor like proposals, right? So I would say that like, don't be hesitant to be like, hey, like I'm willing to write something up, right? Like, the initial like write-up is, 3 pages maybe, right? 3 or 4 pages. It shouldn't be very long because you just get inundated and there will be discussion, right? And then like, it can be like tweaked and whatnot. And then if it is good, like, why wouldn't you as a big holder be like, I want this to go trade because I want my mountain to turn into more money, right? And so I think that that's like kind of fine for right now. And it's much more like, hey, we got to drive it. You have to drive like engagement from a strong proposal dynamic as opposed to like being concerned about bureaucracy potentially. And do you have anything to add?
I think a key part to continuing, like keeping forward propulsion is having your like action trigger points. So for me, putting up a proposal for voting is like an important action trigger point, right? There's always going to be a ton of discussion in the Discord. People are agreeing, disagreeing. Conversations are like kind of half-baked. At some point, somebody's got to be like, all right, let's trade on this, right? And once you make that jump, there's 3 days to trade on it. And that's an important chapter. Like we've moved past that chapter, right? As soon as the proposal is done. I'm one of the holders that has little interest, frankly, in bringing deals to the DAO. Like I'll do it, right? But that's like not top of my list. Top of my list is seeing DAO engagement move forward. Not just because, I helped shepherd Mountain Capital into existence, but because that as a DAO holder is how I think I build the most value over time, right? So what I do is I get in there and I see all this discussion and, I add my opinions here and there, but at some point I go, hey, like I'll volunteer to be a sponsor for this proposal. I like it, let's do it. Let's do it tomorrow, right? And I think you need like a certain set of people to do those types of things, to push on those action trigger points.
Which is great because I like deals, so I look at Carrie and I go, that's great for me.
All right, how are we feeling? Who else has questions? What are people looking at on Twitter? I haven't looked at Twitter in fucking 40 minutes. I feel like I've missed an entire...
We missed about 14,000 tokens.
Oh my God, dude. Believe is doing so well right now and has an incredible virality loop. I was supposed to talk a little bit about Dark today. If you guys want to hear about that, I'm around to hang out. But one of the things I'm thinking about is how to build a better virality loop for Dark in the app experience. I think that if you think about like K-factor virality, right? How many users a given user brings in additionally, I think these like Launchpads are just doing incredibly. And obviously because they're launching tokens, because you're making money, right? But this attention app coin kind of narrative, I think, is super, super powerful. So
also, if people have questions around tokens, new token metas, then it doesn't have to be about Mountain Capital. We're happy to toss a hot opinion out there.
Yeah, we disagree on a lot, Barrett and I, so we'll shoot from the hip here. Okay, so here's my hot take. If Zora had done a couple key things differently, it would have been a phenomenal move. And I think they're part of a killer expanding narrative in crypto. It was the few moves that they did incorrectly that fucked them. So I think Zora, my view on tokens is that we're moving into two directions with tokens. One is securitized assets. And I'd actually be curious for your thoughts, Barrett, after I finish with my thesis on where you see like Futarchy and MetaDAO kind of fitting in. But I think that one direction is securitized assets. The second direction is distribution tokens or attention tokens or app coins, right? And I think that, you know, Jesse, Base, Zora, they've been following this distribution token direction. And I think that meta has a ton of value to it, where the tokens fundamentally are the sum value of the attention that is revolving around the given project, right? Another way that I've explained this is like meme coins with a real topic, right? And what's crazy about this Believe launch is we're seeing this happen now in real time, right? People are launching tokens next to purely Web2 products that they're shipping, right? Now, in order for that to work, right, I think you need a fundamentally different structure in how a token launch goes. What it can't do is allocate a ton of money to insiders, raise a bunch of VC capital on the token. Those types of things bleed it into the securitized asset direction and murder this distribution token potential for it, right? And that's where I think that like Zora went wrong. I think that Base's like PR around, you know, the pimping and squirting and like whatever just like fell flat, right? I mean, you know, if you guys have followed me on Twitter for more than 3 days, I think you know that I love shock value like anybody else, right? But like, it's got to land well. It's got to resonate with the community. So, you know, I think that Zora, you know, was onto something. I think they, whether intentionally or not, launched in like a pretty predatory, pretty destructive way. And sometimes it is those like few key things that can completely kill the effort of a company, right? But at a high level, I think there's absolutely space for these distribution tokens. I didn't get to my Tesla, Facebook, Google class share piece of the narrative, which I usually bring, but I'll throw it over to you, Barrett, because I know you've got some other opinions on this.
If you're launching a distribution token, there better not be one fucking token allocated to the team. That's my opinion. It should be buy it like the rest of the people, you know? Don't use it as exit liquidity. I like have no real like, if you want to launch a token and be like, yeah, like it's associated to the application, team didn't get any allocation, I give a shit, right? Like, that's fine. You know, if it goes up, it goes up. If it goes down, it goes down. Like, they didn't promise nothing on equity, nothing on returns. The team got nothing in the first place, right? That's life. Now, if you don't allocate yourself some and then you like launch it and then you like, you know, snipe a bunch and like it was a quiet launch, like there's, you know, that's kind of a scumbag move. But if you're raising like VC dollars and you have and you launch a token with team allocation and you're like, this is, you know, my product token, dog, you better like work hard to make that token go up, right? Or like not just use it as exit liquidity, right? Like I think the biggest crime that crypto has ever had is the equity and token model, where you have a token that the team gets, and then they also get 100% of the equity of the company, and then you have people that are buying this token going, this is effectively equity in their mind, right? And you have this, you know, the value goes one direction, right? And it doesn't flow to the token at all. And those people are the ones that are getting hurt, and that's a huge problem and a huge negative narrative for our space in general. And I have like a pretty large issue with that and with teams that do that. Now, is it going to change? Maybe, hopefully, right? I think that there's like at least some discussion now from like bigger accounts and funds that are pushing for tokens to be, you know, some sort of like securitized asset, right? And I'm not saying that it's got to be a security directly, right? In fact, like, you know, the whole decentralization argument, like, I think goes to making it less of a security, and you shouldn't have to like abide by all the same like standards, right? But again, then you have to be like decentralized, right? And so if you're not doing Futarchy, right, then probably not good for you on like an argument from like a security standpoint. Again, I'm not a lawyer, so like talk to a fucking lawyer.
Sorry? Is the question why? Like why have a token? If you're the creator, you don't hold any.
Yeah, I mean, who knows, right? Because like you don't like if you don't like a competitor, right? Just like roll up on one of their tweets and be like, new coin, baby. You know what I'm saying?
Yeah.
I don't know, but
I think that if we put aside like the operation or like the legal questions here, right? I think attention is all that matters, right? When I was at Margin, I would have this thing I'd tell the team, you know, we'd have a team meeting every Monday, and I would say, what is the most exciting thing in crypto this week, and is it us? And every week, it's gotta be us, right? I mean, it's happening with Dark in real time, right? Like, things popped, things were exciting, I wanted to ship this game, engineering scope, even when it's the one-person dev team, always creeps, right? If we spend 3 more weeks to launch this game, attention is gonna drop. Attention's already dropping, right? Every single week until the end of time, it's gotta be you, right? And yeah, I just don't think there are any other, like as a creator, I don't think you get rights to attention. I don't think you get rights to respect, right? Every day is an interview in the market, and I think it's beautiful, right? Because it also means that like on the other side, any new person can come in and build up their reputation, build up their value, build up their attention base, right? And so yeah, I think the answer is you get absolutely nothing as a creator, right? It's becoming a creator and launching a token is walking into the door, and then after that, it's up to you to be the most interesting person in the room. Yeah, I'll kick it over to Bear in a second, but I think this is like the securitized asset direction. Yeah. And importantly, these tokens need to work very differently than distribution tokens. Yeah. And this is like, I think we need to, we're an industry that loves to have one thing. It's so ironic for being an industry focused on like decentralization, right? There's gotta be one blockchain, right? There's only gonna be one DEX, right? There's gotta be one JITO, right? Like there's gotta be one winner. And the answer is that, you know, mature spaces are multiplayer. And so I think that, this is going to look very, very differently than the distribution tokens that we just talked about. But yeah, I'll kick it over to you, Barrett.
Yeah, I think that you will start to see this like pretty heavily here soon, and I think that it's really interesting for you know, companies and countries, you know, that could effectively like, you know, they're big enough to IPO on an American exchange, right? But their country doesn't have enough like, you know, money there. I think the hard part is you got to convince the people in the trenches to buy your uranium shares, right? Which I think is a much harder task to do because that company's token should, in theory, trade a lot more like a stock than a shitcoin, right? Now, some stocks trade like shitcoins. I get that. But in general, you need to...
S&P 500.
Yeah, the S&P, dude. Watch that. But yeah, you have to, you know, make sure you build a network, or at least go through like some RWA provider, right? That effectively does what like an investment bank does on an IPO, right? Where, let's say like I'm a company, right? And I'm about to IPO. I go to Edgar, Mr. Goldman Sachs over here, and I go, build my fucking book for my IPO so it doesn't flop, right? Like, you know, and I think that that's something that's very different about crypto, where we kind of just go like, well, I'm launching a token, it's out here now, right? Whereas like in traditional markets, you have an investment bank or multiple investment banks that are going around on a roadshow, which is multiple months long, and they're building a book of demand for you as a company, right? And I think that if that is not done carefully on a Web 2 style company, or just like a traditional company that's like, hey, like, I think that I should IPO, but instead of doing it on like an exchange, like a stock exchange, I'm gonna do it on Solana. They have to be very careful that the company that they're working with is going to do something similar to that level of work that an investment bank would have done, right? Because if you're like, hey, I'm about to put, you know, 100, 200, a billion, $10 billion, right? Like some of these IPOs are huge, right? And if you're about to put $10 billion of liquidity onto a chain, right? You better have like people there, otherwise your stock, right? Your token is gonna tank, and you're gonna be like, well, it doesn't really make sense for it to be. I mean, like you could just buy all the shares back, right? Like at that point, you'd be like, yeah, I'm taking like a BIP on my revenue, and I'm just gonna bid all these tokens, right? And then like maybe you'll get to equilibrium eventually, but I think that that's a much harder thing to do, and the people that are going to be buying those types of tokens, right? Those like securitized asset tokens, I think aren't there's not a lot of them here, right? There's a lot of dollars that would, right? But not to the same scale that you see on like a stock market, right? And so I think if you're going to do that, or you're going to convince a company, right? You're like the RWA protocol that's like, I've convinced, you know, uranium manufacturer XYZ from Argentina to like launch on like Solana, you better do a ton of work to get a bunch of liquidity there, because that first one flops and nobody's ever going to go back to you on like an IPO again, right? And I think that also looks like really bad for Solana also, right? Or like any blockchain. And so whoever's going to do that first one, they like better work like really hard to like build that book for it to go well. Otherwise you just like set everything back. I mean, like if it doesn't like have any marketing ever, right? Like nobody ever finds out about it, then like it doesn't really matter. But like my guess is like the first like big style like product like that, IPO, is gonna like be hyped no matter what. And I think that, you know, or at least like it'll have like market attention, and so it should be done like really well. And I think that there's a lot more to a traditional company like tokenizing their securities and like launching it, as opposed to like what we in the industry kind of associate with a token launch, right? We're like, we're talking to market makers, we'll like, you know, make a bunch of tweets, like build some hype, right? And like the token launch will do what it does. And that's just like not the way that you are gonna be able to handle one of those like situations for like a traditional company. But I'm very excited to see those, and I definitely think that securitized assets are going to be very popular here in the not too distant future.
Cool. I think we're gonna wrap it up there, unless anyone else has some burning questions. Appreciate you guys, appreciate you for coming out today, for hearing us out, and then yeah, you know, if you ever want to chat more, you know where to find us on the internet.